G'day investors, it's Peter again. Back to Pete's Investing. No bull dust trading, just simple, reliable trading ideas. But first, our disclaimer. Please feel free to take your time and read this carefully. This is not offering advice or recommendations or holding positions. Past performance and what we're showing is no guarantee of future results, and it's purely an educational video series to better educate you in your investment strategies moving forward.
So today is January the 15th, 2021 for the weekly stock review. So first, interpreting the charts. I'm going to go through these in the first chart, but just to quickly summarise, we're buying shares each lot for the value of $2,000. We're trading on a 15-minute time frame. We're looking at brokerage. It's been factored into the buy and sell executions in Australia for Australian dollars, in the US for US dollars, and in the European shares at €10. That's just an assumption. Obviously that'll change depending on your broker and how you execute those orders. This process we're using, or the strategies we're using for the averaging down, allows for any major changes in trend or a downturn, such as the GFC or COVID impacts, for example. We're looking at how it's impacted against the upward, downward or sideways price movements, and how that affects your profitability and drawdown capability. And we'll look at profitability, how that accounts for in terms of dividend payments. In other words, the profitability of the charts doesn't show any dividends added to your value of account. It's purely on trading accounts. And lastly, the profitability comparing the buy and hold strategy versus the buy and sell and average down strategy. So getting stuck right into it, if we go to the first chart, Commonwealth Bank of Australia, you can see there our last review was done on the 11th of January, and our trade was still open, and on the 12th it closed out. So it made a small little profit. So 770 where we are today, it opened up back at 736. So it made about $50 total. And again, we're trading on the $2,000 lots, so we bought one lot at this point, and it closed out the same number of lots or same number of shares. So we didn't, in other words, we didn't average down. At the moment, it's heading downwards again. The price is heading downwards, so it's going through our CCI 0. So there's no opportunity at the moment to buy. So we'll just see how it goes the next few days. If it turns up, we'll get into it again. We're looking at BHP. And back in when we reviewed last week, it was still not in an open position, and it opened up this morning, this morning at 11:30. We bought 42 shares. So it's only just opened up, so we'll see how that goes in the coming days. Next, we'll look at Johnson & Johnson. So similarly, it opened up at 3:45 in the morning on the 15th. So that's only a fresh opening. We'll track that in the coming days and see how that goes. We bought 12 shares compared to 13 last time. So the price has risen somewhat when we bought it back here. So that's why we're buying less shares, one less share basically. Next, we'll look at JPMorgam. That doesn't show an entry point yet, although the price is still going up. But according to our strategy, we've exited there last week, and we still haven't made an entry. It's still above the zero line, so we're still waiting on that one to retrace a bit before making any entries. Let's not panic about that. Although the price has gone up still, we're going to follow our strategy. Next, we look at Caterpillar. Okay, that's exited as well late last week. It's made a slight improvement in price, but again, no entry point for us. And you'll notice here the buy and hold strategy is made $1,000.52, whereas our buy and sell strategy and averaging down is made only $9.55. And just to review, it generally, when the price goes, this is where it's made all that gain. Up to this point, as you can see there on the profitability, because of this buy and sell strategy and the averaging down, you can see here that's made $422, whereas here it's barely broken even at about $50. The reason this gains more profitability in the buy and hold strategy is because it does this. But as we said last time, this works better than the buy and sell strategy if the price is going to move in this sort of upwards movement, upwards trend for a longer period. Generally, the buy and sell averaging down strategy works best in a sideways market like this. In fact, sideways or even slightly on a downward trend. Next, we look at the European stocks. Telefonica. Okay, this is still averaging down. It's a long-term multiple averaging down. So we're in the red here, below the 100,000 baseline. Somewhat more in the red than the buy and hold strategy, but that's okay. When this bounces back and breaks it into a profitability stage, it will return value for us. So let's keep holding that and following the averaging down strategy. Lastly, Volkswagen. And just further proof to what I was saying just a minute ago. This is going in a very downward sideways market, and you can look at the profitability here. Made $990 for currently running $990 odd, whereas this is still below our baseline. Just hasn't made a profit yet. So, in summary, as per the Caterpillar example, if it trends up nicely upwards, again you've got to be fortunate enough to pick that stock. It's the first challenge, whereas most charts will go sideways, like as in this example. All right, guys. Thanks for watching, and we'll review again.
Thank you for watching. To get notified of all future videos, be sure to subscribe and click on the notification bell below. See you next time, guys. Happy investing.